Hi there, traders. This is Brad Gilbert with the FX Market Insight for Monday, the 8th of April. All right, as we come into the start of the week, okay, now we've got through a lot of the heavy lifting numbers last week. The US non-farm payrolls came through, a little bit probably better than expected. And some of the reports have suggested that, the US economy, everyone's been especially the media, have been talking about a slowdown in the US economy. All it takes is one big number to change that perception, and that's what the numbers have done. Even though the earnings numbers, the average earnings were a little bit weaker, the actual stronger growth in the employment numbers has actually given the dollar a little bit of a boost. The dollar index hasn't really gone anywhere, but that's the perception from the numbers that I'm seeing in the general media articles. Now, let's have a look at the start of the week, today's market conditions. Okay, you're looking at, the majors are still drifting sideways. Those US numbers, because of the mixed data, the non-farm payrolls themselves stronger and the average earnings weaker, they sort of nullified each other. It's one of those things that I mentioned on Friday's Market Insight was just be aware when there's three variables, one can be strong, one can be weak. You get a little bit of a push up, push down, and it doesn't really go too far. And that's exactly what happened there. So just be aware. Right at this point in time, to me, the majors are drifting sideways. But in saying that, we do have a couple of pairs which do have a bit of direction. Now, for whatever reason, the dollar yen is now starting to break higher, and the Kiwi also starting to break down. That's a bit of dollar strength across the board, and there's varying events in other countries which is preventing that clear direction on the pairs. Dollar CAD, dollar Swiss even sideways, Aussie, sterling and euro all sort of just cruising sideways, as is the dollar index itself against that basket. So, what we've got is the fundamental picture is still reasonably clear. Okay, the ECB have warned, told us about slowing growth in the Eurozone. The RBA and the RBNZ have both chimed in with concerns about global growth, and especially the RBNZ, who came out and said, the next possible move is probably down. The RBA not as clear. So we do have a bit of sentiment here. Now, unfortunately, the core market drivers, Brexit and China. Now, it's the 8th of April. The Brexit deadline, or the extended deadline, was the 12th of April. I know Theresa May has been working hard, if you read all the articles on Reuters or Bloomberg, trying to get a deal done before the deadline. I mean, this is a bit of a dog's breakfast, and that's why sterling is sort of pretty much out of the game. And the Bank of England, they can't really do a hell of a lot and try and manage the situation. So everyone's waiting for an outcome. Traders globally, the Bank of England, everyone involved in Europe, everyone's sick to death of it, but it is still there lingering along. Now, this China-US situation, Trump has come out on Friday and said basically the only deal he's going to do is a fantastic deal for the US. So just be aware, you would expect him to give them a little bit of a kick in the belly. One of the latest reports was significant work remains. And this is going on the back of numerous updates and articles by various media outlets saying, things are going really well, then all of a sudden you get one that isn't going so well. Now, upcoming events. Now, this is where you need to focus. As the markets reconnect for the start of the week, okay, Monday, it's not always the best trading day. Okay, last week we had a huge amount of data out, but there wasn't a hell of a lot of opportunities. Today, we've got a few situations coming out. We've got the Canadian housing starts and also the US factory orders. Now, these two releases, you can hold positions through these, so don't think they're huge. But you know what? Even with medium-tier data, if there's significant variance, you can sometimes see a really good trading opportunity develop. All right, that's pretty much all we've got for Monday. Don't forget the traders online meeting for those traders who have come through the workshop on 9:30 p.m. London time. And then we've got to really wait until Wednesday to get into some opportunities. So, but this is actually a pretty standard week. The week usually starts around Wednesday, and that's where we do have, just to give you a bit of a run through, we've got the ECB this week, the ECB meeting. It's going to be very interesting, more so probably the press conference, because we already know Draghi's told us growth is falling. The numbers in Germany have been getting worse. So I would expect something to do with potential plans for more QE or whatever it is. But coming into Wednesday, we also have the US CPI numbers and the FOMC meeting minutes as well. So Wednesday is definitely the go-to day for the week. That's where the biggest potential moving market data is and the highest impacting. But then you come through into Thursday, and I see the Chinese CPI numbers as a really great opportunity for traders in the Asian session, especially with regards Aussie and Kiwi. Huge opportunity there. Significant variance in the Chinese inflation will impact those pairs. And then you follow that up with the some more inflation numbers out of the US, the PPI numbers. And then coming into Friday, industrial production numbers. Not a huge release, but potentially, you know what? The way those German numbers have been really getting weaker, we could see the Eurozone numbers really start to impact, and that could give us a good ending trade to Euro for the end of the week. All right, so that's where we are with the major pairs. As you can see, there's a bit of clear direction. Not exactly much flow on there in dollar yen. This Kiwi is a little bit of a dark horse. It's probably the tiniest pair out of the majors, but at the moment, it has the clearest connection with technicals going down and the fundamental picture also down. If you just have a quick, I'll just give you a quick look at the charts. As I said, there's a few situations. The Aussie is just trading sideways in a bigger range here at the moment. The Kiwi, you can see that sort of slight breakdown. It would be nice to get some sort of confirmation here around either weak Kiwi numbers or strong US numbers to really get that backed up. Dollar yen, it is ticking away to the top side, although lacking momentum as it comes up to that support line. Euro just drifting sideways through around 112 at the moment. You'd expect that to probably continue that until the ECB, or unless we get something weird out of the UK on this Brexit deal. There's sterling. I mean, it's just been drifting lower, but as we've been saying for the last year or two, this could go anywhere. So it's really hard to work out when it is going to go. For me, it's just a sit and watch situation. Dollar CAD right back into the range. It has disconnected from oil at this point. Oil at $63.40. To me, that's just like, it's a clear disconnection with that big correlating factor. So to me, that trend line's gone, and you've got dollar CAD sitting in the middle of the range. It's pretty much anyone's guess from there. All right, guys, that's it from me. As I said, the Monday isn't a huge deal. Get your charts all teed up. Go through your various releases, and we'll work out what's going on. We'll get this video populated there. But a few things to look at to start the week. I like it when there's just a couple of numbers. Give the, especially the US ones, hopefully give the currency pairs something to think about, and traders get ready to start trading come Wednesday. All right, guys, we'll catch you later on. Cheerio.